All right, we're set. Okay. Okay, great, everyone. Welcome to Lendit's Small Business P2P panel. I've been really looking forward to this panel and to this discussion, really going to take a deep dive into small business lending worldwide. And on this panel, we're fortunate to have representatives actually representing 3 different regions of the globe. We have the UK represented, we have China represented, and of course the US. And I think it's going to be really interesting to really learn more about the banking environment, particularly in all the different regions, and not only the banking environment, but also the regulatory environment as well. So for those who know me, the small business financing is something I'm particularly passionate about because when you think about it, the entire progression of mankind actually depends upon finding more efficient ways of capitalizing our entrepreneurs and our innovators. So with us today, we have with us Alex Binkley, who's the CEO and co-founder of Funding Community, which is, you can just raise your, okay, which is a US-based crowdfunding platform. They have a very, very interesting business model which focuses on another area of segment that I'm particularly interested too, which is local businesses and community investing. And I believe with a platform like Funding Community, this is something that as this proliferates, you're really going to see the expansion of local economic development. With us from the UK, we have with us Samir Desai, Funding Circle, founder of Funding Circle. Now, this is a very successful UK-based lending platform, and you may have seen some of the recent press written about Funding Circle. Recently, the UK government made an announcement that they were actually going to use Funding Circle to facilitate loans directly from the government into small businesses. So that's a really interesting. I'm really looking forward to really learning more about that. We have with us from Shanghai, we have with us Saul Hittite, and he is the founder of Sino Lending. Prior to moving to Shanghai to start Sino Lending, Saul co-founded a lending club, who we heard from this morning, and was their head of technology over at Lending Club. It's interesting because in China, the banking system is so different than it is in the U.S. Something that I just recently learned is that, we have these established credit bureaus here, and there's nothing even like that in China, and that Saul is going to talk about what he's doing in that space to really build that type of infrastructure as well, which I think will be really interesting to hear. And finally, we have with us Candace Klein, who speaks at all of my events. She's just a dynamo, is how I put it. I usually say, if you don't know her now, you'll see her on the cover of Fortune magazine in the next couple of years. She's the founder of SomoLend, which is a lending platform that serves underserved markets in the U.S., underserved demographics, like such as women-owned businesses. So with that, I figured maybe after that introduction, we kind of could start with you guys sort of taking the stage and talking a little bit about the banking environment, what you see as the banking environment for small businesses in your particular regions, and how your business model is helping facilitate business loans for those particular companies and areas. So you want to? We'll start with you, Alex.
Absolutely. Well, thanks, Dara. I think the biggest thing to start talking about is what Jason Jones mentioned this morning when we were all down at the Treasury last week. The chairwoman of Key Bank said, small business, there's no problem with small business lending. And then somebody else followed up and said, well, okay, so what target are you talking about? She said, $1 million to $5 million in revenue. And that just disenfranchises a whole huge population of small businesses. The banking environment really isn't set up for in the US for these businesses that have less revenue, that are younger and might have a huge amount of revenue. Banks really don't want to touch those. And so the way we're thinking about it is that if we can really get the local community involved, it provides a much better sense of what businesses should be funded and what businesses shouldn't be funded, as opposed to just a credit officer checking off a box.
Do you want to talk a little bit?
Oh, sure. I actually agree with something that Alex said. Banks don't want to touch small businesses. So the example of China, China has some of the largest banks in the world. But they are large because they are actually helping China build the infrastructure. So they like to focus on projects like building a hospital, a freeway, or a train station. So they are very good at that, and they know exactly how to underwrite projects like that. But if you are a small business, you are a distraction to them. So it's close to impossible if you are a small business to walk into a bank and ask for a loan. They don't have an infrastructure to ask you what documents you have to show. So this situation created what people know by shadow banking. So even though there is a negative connotation to that word, shadow banking, but what it really means is that these transactions do not register in the credit bureau. China has the largest credit bureau, by the way, in terms of people. But half of the economy, half of the credit industry does not show up on that credit bureau. So when we receive a borrower and we have to underwrite him to decide whether to give him a loan or no, we have to look at his credit bureau. Everything that he has in terms of mortgage, credit cards is going to be there. But all the transactions that he did outside of the banking system are not going to be there, and we have to go to other databases to get them. Just to give you an idea, the size of this shadow banking is about $3 trillion US. Wow. And you have tons of companies with licenses to operate in that shadow banking. A perfect example, you have what we call guarantee companies. Basically, these are companies in China that deposit a certain amount of capital in the bank, and the bank gives them a margin from 1 to 5 or 1 to 10. So they can go look for borrowers, underwrite them. The bank trusts their capability of underwriting them, but they take the hit if the borrower does not pay back. So all of that happens inside of the shadow banking.
Wow, that's interesting. And how about in the UK?
Yeah, so I'll just talk a little bit about Funding Circle, if you don't mind.
Yeah, go ahead. Yeah, please.
But so Funding Circle is the largest platform where investors can lend money to small businesses. We're in the UK only at the moment, but we launched in August 2010. We've done about $185 million of lending, and we're now doing about $5 million a week, actually. So it's growing very, very fast. What we found is that these types of platforms can fill a fundamental void in the system. So there was a survey done on Funding Circle borrowers recently by a government agency, and they found that 77% of businesses that borrow through Funding Circle would always approach us first for a loan in the future rather than go to a bank. And actually, the majority of the businesses that come to us aren't necessarily ones that are getting turned down by banks. They're actually ones that are frustrated with the process. It takes 15 to 20 weeks to get a bank loan. You have to fill in 15 pages worth of documents. You have to sit there in a bank branch. So it's a very old school way of doing things. So I think what these peer-to-peer lending platforms are doing, especially in small businesses, is really improving the process.
And focus on also some of these underserved.
Sure. Wow. Hello. So at SomoLend, we've been live for about a year. We launched our platform in May of 2012. And we've had just over 2,000 borrowers on our platform so far. And one of the things that we haven't talked about yet on this panel, you asked about what is being underserved. And we say that banks aren't lending to the smallest businesses. Okay, that is true if you look at the largest banks, but there are a number of lenders in this room even who are. The beauty of the peer-to-peer space or of the crowdfunding space, depending on what you call it, is that it opens up the opportunity for a myriad of different lenders to come together into a syndicate loan. And so what we're seeing right now is that the underserved borrower is typically the consumer-facing brick and mortar business. So you've got retailers, restaurants, salons, gyms, food trucks. These are the types of borrowers who are coming to us. They have relatively high FICO scores. They're not the 750, but they're around 700. So they're relatively high FICO scores. But because of the industry that they're in, their only option is merchant cash advance. And they're getting frustrated with MCA. They don't like the process of going to a traditional bank because they continuously get turned down for their first 2 years, and so now they lack trust. But for the family office, for the hedge fund, for the others of you in the room who are in a yield-starved environment, they are interested in something that's slightly lower than merchant cash advance because they recognize that they still can't yet get into that banking relationship, and there's a huge opportunity for that middle ground.
That's great. So, maybe you could all kind of talk a little bit about, your business model. And I guess focus also from, talk about a little bit from the borrower perspective as well as the lender perspective, and what are the benefits of each one on your platform. And maybe we'll start back around with you, Alex.
Sure. So, we operate very similar to the traditional kind of peer-to-peer lenders, where their lenders are, rather than lending to a consumer, you're lending to a small business. We have a little extra twist because we are talking about small businesses here. In addition to paying back principal and interest every month, we actually ask all of our borrowers to provide some sort of perk or reward to the lenders. And that's really designed to engage the lenders and convince lenders to actually become customers and champions of the business. And practically speaking, it also means that lenders will now be supporting the cash flow of their own loans. So that's the little kind of extra twist that we've added to it. The business model, besides that, isn't that exciting. It's what everybody in this room is probably familiar with in terms of the...
I actually think that's real. I think that's really interesting. Maybe you could talk a little bit about some of the rewards that.
Yeah, absolutely. So, there are things like, when we're dealing with product companies or even a restaurant, 15% off. We launched a borrower who's a big Etsy seller last week. They're a retail shop in Tacoma, Washington, but 70% of their sales are on Etsy, which for some of you may know, it's a platform for homemade products. And this woman has a one-woman shop and just she's growing a lot and needs to sell more soap, frankly. And so she wants to hire some part-time help. She wants bigger vats. She's really not looking for a lot of money. So she's looking for $2,500. And during the term of the loan, she's offering 2-for-1 on these handmade soaps. And we've actually had people reaching out to us and say, I saw this company. I thought it was interesting. And by the way, I/my wife love homemade soaps and love this kind of product. And so I'm lending to you. Not necessarily because of the interest rate. That's interesting, and the fact that there's an 8% interest rate attached to this is great, but it actually helps me discover this new product.
I think it's impassioned investors and funders, and that's what I think all companies should be funded with investors that really care about them. So I think it's brilliant. Sal, maybe you want to.
Interesting idea. So we implemented the original pure P2P model, where it's a platform. You have a lender side and a borrower side. It's anonymous. So a typical borrower for us will be, for example, a store owner who has 1 or 2 stores. The economy in China is moving at 7-8% every year. So there is business coming in. He needs to open a 3rd store. So our loans are large in amount. So we lend about 1 to 2 million RMB, which is about 300,000 US dollars. Interest rates are around 20%, 20 to 22%. And the maturities are from 3 months to 9 months. Majority is around six months. Business loans are short in nature and a couple of points higher in interest rates. There are 3 types of ways they can pay back. We have interest-only loans, and it's preferred by small businesses because they need working capital. Or we have amortized loans, where they pay interest and principal every month. Or we have a combination of both, where they pay the principal every 3 months. So this product is so attractive to businesses that we keep hearing success stories all the time. When they come to us, they compare like the 5 days that it took them to do the application and get the money to the 2 months, like you were mentioning before, that it takes them with the bank, plus the humiliation and the process that is not clear.
And what would be the ideal company that would borrow in terms of revenue, in terms of size?
So we have a few parameters that we use to underwrite companies. There is a concept of registered capital. We need to see your banking transactions for the last 12 months. Right now, we're only covering Shanghai and Zhejiang province, which is about 100 million population. China has 42 million small and medium-sized businesses. Wow. And based on our internal credit model, a fifth of that will qualify. But we have to look for them all over China. But now we are focusing on one of the most economically advanced region. China is organized in three type of cities. There's the first-tier city, Shanghai, Beijing, Guangzhou, Shenzhen, and you have a lot of data about these cities. And you go to second-tier cities, data is like less available, and then third-tier cities. But based on our business model, we cover a population of 350 million people, which is the same as the US population.
And the industries at these businesses, is it similar to like Alex, where it's in community restaurants and
exactly,
and, yep.
Exactly.
Okay.
So one of the channels we use is the same as what Groupon does. So when you were talking about discounts and things like that, we have a sales team. Most of it comes from businesses like that. But I give you a typical example. An event company organizes events. Gets a contract from a large corporation to send 1,000 people to Sanya, which is the Florida of the Miami of China, for a conference or for a training. So they get a 20% deposit from the corporation, but they have to buy tickets, they have to buy hotel rooms, and they don't have that capital. The capital that they have is only good for 20 people or something. So they come to us, they apply, they get the money, and they do the transaction.
That's great.
That's a typical example.
Well, we'll call you when we're planning to Lendit 2014.
Sure.
And how about you, Samir?
Yeah, so our platform operates in a similar way to lending clubs. It's a marketplace. You can pick and choose the loans that you want to get involved in. We have automatic allocation tools as well. I suppose one of the big differences is that in business lending, you actually see the name of the business. So you can get further data on that business. You can go to their website. You can do much more kind of analysis as an investor in it. The typical net returns are between 6 and 10% a year. We have an integrated secondary market, which is very liquid. So on average, it takes about 20 minutes to sell a loan at par value. So it's a kind of instant access, high-yielding product. And we're going to start to go into high-yielding risk grades now as we've built out our risk analysis. So that's kind of the investor benefits. On the business side, they typically get the money within a week, so it's much faster than through a bank. We're very fast at putting in security in place, so we have a range of different types of security, from all the assets of a business to a specific asset, a piece of machinery. And what we found is it actually just broadly matches the population of businesses in the UK. So we're not skewing towards one sector or the other. We've got manufacturing firms, restaurants, heavy equipment firms, asset-light firms like lawyers as well. So it's just a broad range, really.
And how does how does the government choose what businesses that they want to?
Yeah, so the government actually has already started lending through Funding Circle. We've also got local governments lending, and I think they've lent about $8 million now. Wow. They actually just use an automatic tool to get exposure to every loan. There are actually reasons why they're not allowed to pick and choose.
Okay, that's
I won't bore everyone with the details, but
that's great.
But they basically take 20% of every loan at the moment.
So every single
Yeah.
That's really interesting. And Kansas, what about what are you seeing in your?
There are two questions, I guess. What is the business model, and who is our typical borrower?
Right.
So our business model is actually quite different than that of Lending Club and Prosper and others in the space, because we are not buying the notes from the borrower and then reselling them out to the lender. We are a technology platform that actually allows for a direct note to be signed between borrower and lender. There was a company called Circle Lending that was popular years ago, purchased by Virgin Money. We're much more similar to that business model. So we're a technology platform that facilitates the legalization of documents, but the notes are signed directly between borrower and lender. Because of that, we are completely transparent. So as a lender, you can see who the borrower is, you can communicate directly with them, conduct your own due diligence before making a lending decision, negotiate directly with that borrower. And we actually facilitate the loan packaging, initial underwriting. We facilitate the negotiation and process, the ACH processing, payment processing back and forth. The benefit of that for our borrower is that they are able to participate in a syndicate. So they can raise some money from their friends and family, and we typically will have an institutional lender coming in and doing an automatic match as soon as they hit a trigger point. So they hit 20, 30, 40% of their goal, and as soon as they hit that trigger point, we have an institutional investor ready to come in and close out the remainder of that loan. And many times they've pre-committed, so there's an incentive now for the borrower to raise that money from friends and family. The benefit to the borrower in that is that they actually get an interest rate that's more attractive to them because their friends and family are typically coming in at lower interest rates. The institutional lenders are coming in at higher interest rates. The average interest rate is quite attractive. The benefit to the lenders, friends and family are actually having the emotion taken out of the friends and family financing. I raised money from my first company from my mom and my uncle, and I learned after I borrowed their money that my uncle's a jerk, and my mom cries. Like, who do you pay back first? It's a very emotional decision, made for two very uncomfortable Thanksgivings. So that we take the emotion out for the friends and family. That's the benefit for them. It's legalized, the ACH payment processing is happening. They don't have to worry about collection. For the institutional investor, they're able to come in later in the process, taking less risk. They'll still have first priority in the event of default because they're collateralizing their note, whereas friends and family are signing unsecured notes. So everybody wins in our process, and we're very excited about that. Now, sorry for the long response, but who is our borrower? We're not targeting startups. We are not looking for the business that doesn't have anything to go off of. We typically will work with businesses that are at least a year old. Ideally, they're 2 years old or older. Like I mentioned earlier, they are brick and mortar consumer-facing businesses. So we have dentists' offices and law firms, and then the typical retailers and restaurants. They typically have decent FICO, and their average request is $157,000. And that is typically for inventory, equipment, and real estate.
Well, no, we're going to talk about a couple of success stories on the platforms. Maybe you want to just start, and we'll work our way back down this way, because I know you have one that leads into the
Sure. Well, so you can all meet one of our borrowers. Jean-Francois Flachet is coming and speaking at 3 o'clock in the workshop next door. So come and listen to his story. He's cool. He's got a great accent. He actually was an immigrant who moved to the U.S. With a dream of owning his own waffle restaurant. He got his PhD in economics, brilliant guy, got turned down by every single bank in town when he was trying to schlep his waffles. And so he got ticked off at the process. He now has opened 4 waffle shops, bootstrapped every single one, and is opening his 5th. And for his 5th, he said, I'm done with the banks. I'm just finished. And he has very loyal customers, people who have come to his shop every single day to get their breakfast. And so he said, I'm going to go out to my customers. I'm going to let them grow as I grow. He raised about $60,000 from his friends, family, and customers. That was matched with a $30,000 loan from his city. So we have municipal governments lending on our platform as well, about 5 different cities. And then finally, a credit union came in and closed out the remainder of the loan. It was a beautiful syndicate, and it's one that he would have never had access to had he not started with his friends and family.
That's great. Samir?
Sorry, his business is Taste of Belgium, so check it out. Please go buy his waffles online. Okay.
So I'll give a couple of examples to highlight maybe some of the process stuff. So we had a boatyard that borrowed through Funding Circle a couple of years ago. They've been spending 3 months talking to their bank about getting a loan, and they basically wanted to buy a new boat because summer was there. They wanted to take people up and down the Thames. Unfortunately, they didn't get an answer from the bank. They came to Funding Circle, got the money within a week, bought the boat. 3 months later, they got a call from the bank saying, actually, we'll give you that loan. So meanwhile, summer's kind of come and gone. Right. Guys had no chance to do stuff. So that's one example. Another example is we've done a lot of finance for a number of cranes for actually quite a large company. So this is a 100 million turnover business. And one of the things that they liked about using the Funding Circle platform was that they could secure the individual assets as opposed to a whole pool of assets. So again, like a lot of asset finance companies, banks want these businesses to give them the entire pool. And by having individual assets, it meant that they had more flexibility to repay loans early and do stuff like that. So it's just a couple of examples. Yeah.
So it's what I think is really interesting, even in the fact that also, you spoke about before the government, funding 20%. So, the returns that they're getting, is that, so, and you could talk about, some of the returns and default rates, but I mean, for the government, I mean, that's pretty incredible. I mean, they're getting pretty great returns, and then, can they lower taxes? I mean, what's the...
Well, the primary reason the government is lending is to increase awareness of the space. So it was alluded to earlier, but in the UK, 90% of all lending is done by 5 banks. And there's very little awareness of Funding Circle and other peer-to-peer lending platforms. So I think we monitor a business survey that goes out quite often, and it's still less than 1% of businesses have heard of it. So, and also, for businesses, it's quite an emotive decision to borrow money. They borrow, say, 50,000 to £100,000. They want to talk to someone. They feel it's a bit more of an emotional decision. So, because of that, when they come to the website and they see this new thing, I'm just borrowing on the internet, they think, oh, well, it's not really trustworthy. So again, it's getting government involved to increase the trust on the marketplace. So, I mean, those are the main reasons why they're doing it. And yeah, they are getting good returns. I mean, so every 100% of investors that have diversified across 100 businesses equally on Funding Circle, so more than 100 have got positive returns, and over 60% are earning between 6 and 10% a year. So it is, over time we've been able, through data, to get much better at predicting the losses and likelihood of default on these types of loans. And it is an attractive asset class, I think.
Well, we hope after Lendit, only 1% of the people haven't heard of you. So.
Yeah.
That's all.
I think most of our borrowers are happy customers, because I think in this panel we all know if you get money to work on your dreams, to them, doing business is their dream. They're going to be very happy about it. But I want to also talk about the lenders. Our lenders are really happy. The reason is we try to educate a lot about how this works, but we get these phone calls, surprising phone calls that tell us, oh, I gave you money at the beginning of the month, but I was expecting you're returning back to me after 6 months, but I'm already receiving payments. So most of people in China, they think that they're only going to get their money back after 6 months. So they tell us, oh, this is almost like buying an apartment and renting it out.
Wow.
So they start to get the concept of fixed income products. And in China, there is a lot of money, but so little investment opportunities. In the US, we have the stock market, we have VC communities active and all of that. But in China, the stock market is super volatile. If you are an investor, you want to invest outside of China, you have a cap of $50,000 US. So whenever there is a good opportunity to invest, clear, that does not require a lot of knowledge, which is exactly what Sino Lending is offering. You know exactly that your money is going to go to him, to her, and to him, and you'll get your money back every month. They feel really comfortable with the offer.
And do lenders, do they, I mean, here in the U.S., we have certain rules for accredited investors. In China, is it similar, or can anybody be a lender?
The legal framework that we rely on in China is actually a timeless industry in China, maybe 200 years old. It is common in China that 2 people can lend money to each other. So what we did is created a legal structure that we are operating as like what you guys are doing. We're creating all the legal documents between them. We also make the borrower agree that in case of default or delays, we are representing the lenders in our collection efforts. So that gives us the right to operate that loan. Now, your question was about who are these lenders? What are these lenders? The concept of accredited is not as big as it is in China, but most of our lenders are people that are comfortable with the internet, people that have online banking. China is home to Taobao, the largest online store in the world, the size of Amazon and eBay put together in terms of number of transactions. So whoever did a transaction in that platform knows how to take money from his bank account to a payment company and invest it. That is exactly the same flow. So in the US, you go through the ACH process, and you wait for a couple of days to see your money, and then you can invest. In China, you can do the whole thing in 30 seconds, which is very powerful. The power of now, the power of I saw a loan that I like, I want to invest in it, is really strong.
Do you see that infrastructure starting to develop here in the U.S., just that technology and even that, that mentality. I mean, now that Google kind of entering the space, people are starting to kind of think a little bit more in those terms.
So, in terms of technology, and trust me, I know technology very well, we are much advanced than what the market wants. I think it's the regulations that are a little bit behind, and we have to wait for them to catch up. What we have in mind, if we have regulations that we think are going to add efficiency, is unlimited. P2P, we just see in the beginning of it. I think a lot of other industries are going to adopt P2P. Insurance, for example. There is no reason why we can't get together 10,000 people and insure ourselves. And technology can facilitate that. So we are in technology always ahead. So we have to wait for regulations to reach where we are so we can do the next step.
Right. We're going to talk about that next, and hopefully we get there. Alex, what do you see just as far as any success stories that you want to point to?
Yeah, so we're very much in our early days of the platform, but one of the things that we had a day where somebody they found us, they lent to a business, and then they reached out and said, I'm actually really excited. I found this company, Alexander West. They make bespoke dress shirts. I found them on your platform, saw that they're looking to expand into custom suits, saw an interest rate attached to that loan, and that I was going to get 20% off during the term of the loan. And he reached out and said, this is great. I already know these guys. I own their suits. I want to buy, or I own their shirts rather. I want to buy their suits from them. I want to support their growth. And to me, that was amazing. And I actually had to forward it over to the owner because he was a little bit suspect when we first launched with him. He said, well, am I sure that I really want to send an email out to my customers saying we're borrowing money on this platform? Do I want them to know that this is what we're doing? And I said, listen, you're growing and you're trying to grow. You're trying to build a better product for these people who have already been supporting you over time. And so that, for me, bringing that full circle and sending that email back to him and say, listen, this guy found us and said, yeah, I want to support you. That was really huge for us.
So how do you get over some of the regulatory hurdles here in the U.S.? Can the company go out and send that email to his customers?
Yeah, so we've spent a lot of time building our regulatory structure. What we offer on Funding Community is not a security. So there are a whole host of things that go into that. But one of the primary things that you'll see is all of our loans are 9 months or less. And so we actually really rely on the businesses to go out and say, I'm raising money on this platform. This is a loan we're trying to take out. We really push that, and we push the social media aspect, and that's a big part of how we're acquiring both new lenders for all of our projects and new borrowers, in that they're seeing this coming out from all the businesses.
So it's not a security, so they don't get an actual, like a certificate or a piece of paper? Or...
So it is a loan. It's,
okay.
There's a loan document. It's a two-part structure. Again, like a lot of you are probably familiar with. But because of the legal framework around that note, it's not considered a security.
It's interesting.
But it is a loan with a legal obligation for the borrower to repay us, for us to repay the lender, and we actually have a security interest in the borrower's assets. We have a personal guarantee. Yeah.
So what kind of default rates, if you have a personal guarantee, so then for the lender is always protected?
The lender is always protected, but obviously on the, even on the consumer side, that's a personal guarantee and their default. So I think we're cognizant of the fact that, even with a security interest and a personal guarantee, there will be default rates. We've looked a lot actually at the UK and some of the things that have happened there, both in what Samir and his team are doing at Funding Circle, and then what some of the peer-to-peer lending folks have been doing. I really like this idea. The rate setter guys were talking about the provisional fund this morning. I really like that idea because it shows that you're thinking a lot about your lenders and making sure your lenders are repaid. So one of the things that we've built into the platform is that we actually guarantee repayment of a small portion of the principal. And I'll be the first to admit, it's a very small portion, but it shows that we actually do have a little bit of skin in the game. We're not just a pipeline where loans are being passed back and forth. So if the loan defaults, not only do we lose that service fee that's being repaid as we're repaying the lenders, but we actually lose a % of the origination fee that we made from the borrower.
So let's talk about, we're talking about the regulatory community, the environment here. Candace, maybe, I know that you were, played a very active role in helping frame the legislation. You're on the board of CIFRA and on the, which is the crowdfunding regulatory industry advocacy group, and framing the legislation of the Jobs Act. Talk a little bit about the Jobs Act, how that's going to actually change small business lending in the U.S. or peer to to business here in the U.S. and where are we at? Give us some insight.
Oh, so the Jobs Act is just frustrating in one word. Dara and I have both been very active in not only the crafting of the legislation, but in the regulatory crafting thereafter. We've been working with the SEC and FINRA nearly on a weekly basis since last April. We're tired because there hasn't been that much movement with the Jobs Act. I can tell you that I built my business, and just as a side note, my first boss told me, Candace, we won't represent you because you're violating federal securities laws. And I said, well, you're fired. That's the wrong answer. That's the lazy lawyer C answer. The B answer is that there are exemptions and we can work our way through those, which we are doing today. And the A answer is let's just change the law. And he laughed at me. And then we went to Washington, D.C., and we did just that. Now, that's exciting. And the Jobs Act has a lot of opportunity for all securities-based investing. This is not just equity. This is also including debt. And it's not currently legal in the true crowdfunding sense of the word. And from a timing perspective, I don't think that we are going to see anything implemented until late 2014. Quite honestly. Even if Mary Jo White were to sign in public comment period today, we wouldn't see crowdfunding actually happening until summer of next year, just with the timing of the comment period and then with FINRA's follow-up rulemaking period. What we have done at SomoLend is we've said, okay, excuse my French in the audience, but Jobs Act be damned. We are going to move forward as best as we can and build a strong business model until the crowd catches up. And so we today offer, institutional and corporate lenders because they are exempt and through securities laws, accredited investors through 506 offerings, and friends and family and pre-existing relationships through limited offerings through 401A. And so today, those are the ways that we can operate. We actually can build a very successful business model without the crowd, but it doesn't become interesting. We don't change the world until the crowd is able to invest as well. And so I will tell you that it doesn't become a really cool business until the Jobs Act is fully implemented.
It'll happen.
It'll happen. It'll happen. Yeah.
So on like do you ever see or foresee like something like what we see in the UK? I mean, do you think that the government here in the US would ever start to embrace it in a similar manner?
Already we're seeing that. I mean, so we have I think 6 municipalities who signed on to lend on our platform so far, and what they told us is we have revolving loan funds that we receive federal government money for, and the average default rate, at least for the cities that we've spoken to, is 80%.
Oh my God.
And when we asked why, they said we just don't have anyone collecting. And so that was the response. Gotta love government, right? So I think that there's a real opportunity, and local governments are already coming on board.
Interesting.
I think the federal government has a while to go. And Samir and I have had a number of conversations with the U.S. Treasury about this, and I think that they're going to be behind the UK for some period of time.
I think it's interesting. I think you are going to see it start to develop on a local level before we see it start to develop on a national level. But that's actually really interesting. Mm-hmm. And maybe, Samir, you could talk a little bit more about the role. I mean, now we see the government is actually participating, but what about the regulatory oversight? I mean, what are some of the rules and regs over there?
So we had a very strange situation in the UK, which still exists today, which is that this market is completely unregulated. So I remember in
must be nice.
Well, it's got its challenges. So around August 2008, when we came up with the idea for Funding Circle, we actually spent a year talking to the FSA about whether this needed to be regulated, and the advice we got was just send them a letter, and if they don't respond, then it's fine. And ultimately, we all didn't want to quit our jobs and try and build this if we had a letter. So we ended up getting a letter saying, look, this doesn't need to be regulated. So we started the business, and it's gone really well since then. But what we found, and what the two other, the two consumer players in the UK, Zopa and RateSetter, have found, is that actually being unregulated has a lot of challenges as well. Every newspaper article about peer-to-peer lending ends with "it's not regulated," and that puts off borrowers as well as lenders. We were also very worried about someone coming into the space and just screwing it up for all of us. So we took a very proactive approach to regulation. We were worried about the tanks turning up on the lawn, really. So we've actually been lobbying for regulation for 2 years, as Pete said, and the UK government has agreed now to regulate the space from next year. And I actually think, a lot of people say to me, I was protectionist, but the reality of it is that I actually think it will make it easier for new entrants to come in. The problem we have is that, Zopa, RateSetter, and Funding Circle all have different legal opinions. And, we sit in our room and we're like, well, who's right, really? And, for a lot of new entrants, they're going to go through this process and say, well, we can't figure it out. So actually having a playbook should, actually increase the number of peer-to-peer lenders. But in general, government has been very, very supportive of peer-to-peer lending. I mean, I think, as you said, we have a much worse situation in terms of the concentration of our banking system. I mean, we talk about 5 banks. Actually, 45p in every pound lent to businesses in the UK comes from one bank, which is RBS. Which I don't know if you've heard of it, but it ran into a few problems, and that's really constrained credit to the economy. So. I think it's very forward-thinking of the government to be lending through the platform. It's definitely helped us increase awareness, and our growth is accelerating, actually. So
great.
I think, I would welcome the US government doing something similar. But
well, if not, I'm moving to the UK.
But I have to say, I mean, the US regulatory environment is, I don't fully understand it. It's ridiculous.
And so what do you think in China? I mean, how is it regulated?
Yeah, so I thought we were way behind in China, but actually we're not. Seriously, I thought the Jobs Act was much more advanced than that.
Right.
In China, the process of regulating is completely different than what we see in the West, whether it's the UK or the US. Perfect example to give you is third payment companies like PayPal. So these companies have been operating for 5 years before the government came and says, oh, this industry is big enough. I can spend energy to understand it, then I can regulate it. China has to regulate so many things. So they have to pick and choose what is worth regulating and what is not worth regulating. The internet has been giving them a lot of headaches, but they like to protect consumers. So there are a couple of offices that will be regulating this industry. There is one called the CBRC, which is what governs banks, and there is one called the CRC, which is the equivalent of the SEC. But nobody knows if it belongs to one office or another. But what we saw a lot of good signs. So for example, the local government in Shanghai has been supporting P2P a lot. The vice mayor of Shanghai organized a P2P day to give credibility to this business. We have some representative from the Shanghai local government, Liu Jin, is here to understand how P2P is operating in the US. And this opportunity for her to talk to everyone so she can take back the knowledge about regulations and see how it fits in China. The regulators in China have been inviting Lending Club to come present in Shanghai all the time. So they are very proactive. They just need to see how this is going to work. They have borrowers that they have to protect. They are not happy at all with the status of the credit industry. There is a law, for example, that says you cannot lend money at more than 4 times the rates of the banking rate, which is about 7%. So you cannot lend money for more than 28%. But we have people in the market borrowing at 36%. So there is a law that you cannot execute. It's not good for regulators. So they want to make sure that whatever license they give, that they're going to be able to execute it properly to protect both the lenders and the borrowers. But they are fascinated by this business model. They believe that it's going to create a financial inclusion that China needs today. China is a asymmetric society. You have a lot of people that are moving from rural area to cities. We're going to have 1 billion Chinese living in cities in about 10 years from today. And these people need capital to become value creators in the economy of China. So they are aware of all these things, and they are proactively looking to properly licensing.
Yeah, I think it's interesting, and I mean, I think, for Alex too, I think, we're also going to say, the federal level in the U.S., I mean, we're still jumping through a lot of hoops, and there's still a lot of hurdles to overcome, but on the local and state level, it's very different. It's a very different environment, and, even as you started talking about, and I think we're going to start to see, the kind of pre-Jobs Act crowdfunding, if you want to call it that, happening legally on a state-by-state level.
Yeah.
What do you
Absolutely. I mean, I think we're seeing it, in a number of states. I think, Georgia just passed their own. I think North Carolina is working on their own, and so I think the states are really jumping on board with this, which is good and bad. If it creates a permissive environment and that's regulated, I think it's great. The concerning thing is that it might become like the lending laws in the U.S., which are all over the map, state by state. So when you try to become a lender, you are doing a full 50-state analysis and determining what you can do, what you can't do, and where you can do these things. So going state by state is a challenge, as Candace mentioned. And I think that what she's done with the Jobs Act is phenomenal. And getting that happening is really amazing. We looked at that. We spent a lot of time thinking about it, and it's frustrating. It's frustrating to see a piece of legislation that was passed in April of 2012, and a lot of platforms kind of jumped on that and said, "Great, now we can start making this happen," and it's just not.
So we'll end it with maybe some predictions and talk about a little bit where you see the marketplace going for small business lending in the different regions or in the different in your different areas, and and even where you see your own business growing. I mean, and then make sure to give everybody also your URL to check you guys out too. So, what do you think?
Great. Well, we're fundingcommunity.com. It's pretty easy. I think there's huge room for growth in this business. Especially under $50,000 loan amounts, they're on the business side. It's way underserved. So, and then on the flip side, as we're seeing with the peer-to-peer platforms, they're headed much more towards institutional than retail and individual lenders. And I know this room is a lot of that institutional side. And I think when we talk about growth at Funding Community, we talk about getting the community involved, continuing to get those individual lenders to support their companies, and much like Candace has found with SomoLend, at some point there will be a lot of room to top up the remaining piece of those loans when you've seen that the community really is engaged and wants to support this company. So that's where we really see the market going.
I think so too. I think the P2P model is going to grow really, really big. It's going to become economy of scale and all. But I predict that what we created is an investment product, actually. The borrower side is important, but the lender side is also extremely important. Like you take someone who has $500,000 on Lending Club platform, for example, and that person can lend money to 20,000 people, not correlated to each other. That's what small banks do. That's what credit unions are doing. So we took every person and we made him a bank. So I predict that this industry is going to become like the travel industry. So people will never go to a bank to apply for a loan. The same way we don't go to American Airlines or an agency, which we used to do 15 years ago, to buy a ticket. It will be the best way, the quickest way to get a loan. So that's economy of scale. I don't believe that we're going to see projects like VC, for example, active in lending money or funding projects. I don't think we're going to see it. And the reason is because these are things that are hard to price. A loan is easy to price. You're going to borrow money for 12 months. You're going to pay 12%. I expect this every day. So it's clear. So I don't have to explain too much. But a company that's looking for funding, it's still difficult to explain to the lenders what they are getting into.
Right.
So I think we're going to grow super big and super fast in things that are easy to price on the internet. Their value is universal.
It's interesting. I agree. Samir, what do you
Cool. Well, I've ruined my microphone, so I won't talk too long. But I kind of agree. I come back to that stat that I said before: 77% of businesses, once they've gone to Funding Circle, would always come back to us first in the future for a loan. So, this is a fundamentally better product for business borrowers. And if you look at bond markets, because this is kind of what these things are, they're 21st century bond markets. Those are 20 to 40% of big business finance, depending on the market. So, I think the same thing is going to happen in peer-to-peer lending. I think these markets become international. A lot of these people in this room are institutional liquidity providers. I don't think individuals in the UK are going to start lending to businesses in the US anytime soon. But I think that institutional liquidity pools will connect across different geographies, and I think that's very exciting.
I promise to be brief. I know that we're wrapping up. So what my prediction of the future is, I think, more tied to collaborative consumption. And so I'm looking a bit bigger beyond peer-to-peer lending. I believe that there is a lot in our world that is commoditized that we are paying inefficiently for as investors, as lenders, and for one another. Our healthcare. Why could we not crowdfund our own healthcare? It makes sense to me. You mentioned insurance. I'm looking at commoditized services, legal, accounting. Why am I going to an accounting firm or a law firm when I could go to collaborative consumption? And so whether or not it's SomoLend doing these things, I believe that there is a huge opportunity for peer-to-peer everything. And I think that that's what we're seeing. We're just the first wave, but there's many more waves to come.
Thank you so much. To summarize, it's the disintermediation of the banking system, and it's the power of the crowd. So thanks, everyone. That was really great, guys. I really enjoyed it.